Okay, so a very quick introduction to Community Energy Scotland. Just for those who are not aware of what we're about, we're a member-led independent organisation providing practical and technical support for community groups and organisations with their low-carbon project development. We will work with groups at whatever stage or stages they want us to work with. We can be there from the very start of the conversation through more formal planning stages with the community, including consultations, statutory paperwork, funding bids, technical help, whatever the project owners want us to help them with. It's important to note that we're not a funding organisation. For those who are not as familiar with us. But we do work with finance support organisations, for example, Triodos, who are here today, and also grant funders to support our members. We also enable our members to link up and network with each other, and we create what we hope are insightful opportunities within the community and energy sector, whether that's online or in person. We work in partnership with community groups and others who share our values, building their understanding and capacity to create more democratic, sustainable and low carbon solutions. Behind the scenes, which isn't always as well known about us, is that we are the collective voice of community energy groups in Scotland. We represent our members at Scottish and UK government level and industry level to help influence policy and other decision making for the sector. So just to clarify about the context of community energy, it is broad, and it essentially means, in the context that we refer to it in nowadays, it means existing, new and upcoming community-led groups and organisations working on energy activity, which could include delivering energy efficiency advice, transport or its infrastructure, collective retrofitting work, heat networks, and of course, energy generation. The Energy Learning Network, or ELN, as it's known for short, is a UK-wide programme where we work with our counterparts in England, Wales and Northern Ireland, plus 2 UK-wide partners, Ashton Climate Solutions and the Centre for Sustainable Energy. It's a 4-year programme which started last year and it's funded by the National Lottery. The ongoing plans of the programme are shaped by feedback from our members and other community organisations wanting to work on energy, and an advisory board, which is made up of community energy organisations and others with community energy interests. The programme builds on the work already being delivered by the community energy sector, helping to scale community low carbon projects by helping develop communities' capacity in the form of growing the sharing of knowledge and expertise, facilitating networking opportunities, and enhancing resources to support community energy projects. We also work alongside other enabling organisations and local authorities as part of the programme. The programme offers a free peer mentoring service for members. That is currently fully subscribed, but we are hoping to roll that out further. So keep your eyes and ears open for more information on that if you're interested. There are UK-wide online events held, as well as the individual nation hosted events like this one today. So just keep an eye on our web pages, on our website, ELN webpage and resources webpage, the events diary on our homepage, and of course, social media. And just so you know, any previous webinar recordings will be and are actually saved on the ELN project and resources web pages of our website. So you can always go back to listen there. So thank you for your attention. And now I'll hand you over to Gerry at Triodos.
Okay, so yeah, as Kath said, my name is Di and I'm a senior manager at Triodos Bank. I work within the corporate finance team, which is probably the slightly lesser known part of the bank, which essentially structures deals and puts them onto the crowdfunding platform and raises finance through that. But more detail to come on that in a bit. So I thought before I kind of dive into the crowdfunding part. Just most of you probably have some awareness of Triodos and what we're about, but I just thought it'd be helpful to perhaps just refresh on that for a couple of minutes. So Triodos Bank was initially established in 1980 with the goal of making money work for positive change, whether that's environmental, social or cultural change. We now work across 5 European countries. So in the UK, this is the UK branch, but we work across other European countries. And across those countries, we have about 750,000 customers now. We've been operating in the UK for about 30 years. So it's actually our 30th year anniversary in June. We had a nice celebration for that. So yes, that's a bit of a summary about Triodos kind of globally. So in the UK, the kind of main part of the bank, as most of you are probably aware of, if you do know Triodos, is kind of the main lending arm. So in the UK, we have a loan book of about 1 billion now, and we provide loans from anything from £100,000 up to 20 million. We work across all impact sectors. So obviously renewable energy and community energy is an important sector, but we do work across all impact sectors. So the diagram there just kind of shows the sectors that we work across, or transition themes as we kind of call them now. So you can see, so we work with charities, also a lot around circular economy, organic food, and the energy transition there, obviously where community energy sits, and that makes up about 20% of the loan book. In the renewable energy space, Triodos really was quite pioneering back in the day. So I think Triodos financed its first wind turbine in 1996, before it was kind of mainstream, before anyone else was doing it. And that's one of the things that Triodos really tries to do, is to try and be a pioneer in driving change in finance. Obviously, renewable energy has become more mainstream now, but we still look to lead the way in that sector. And we're looking to lead the way and be pioneers in other kind of emerging sectors, such as natural capital and things like that. So in terms of our support for the community energy sector, as I said, we've been working in the sector for 30 years, for as long as we've been in existence in the UK. In community energy, we've funded 30 community energy projects in the UK with a total of around 85 million of lending. That's on the project finance kind of lending side, which many of you may be familiar with already. And then on the crowdfunding side, which you may be less familiar, we've also been a strong supporter of the sector, and we've raised around £29 million for community energy projects through the crowdfunding platform. And that has been either through community bond offers or share offers, and we'll come on to a bit more detail around that in a moment. Okay, so Triodos crowdfunding, just thought it'd be helpful just to set the context a little bit as to why on earth Triodos is doing these activities. So essentially, the crowdfunding activities were started kind of over 15 years ago, and the reason for it starting is that a lot of organisations, impact-driven organisations, were coming to Triodos looking for finance, but not all of those were suitable for kind of your standard lending. Maybe because they were early stage, maybe because they were higher risk, maybe because they didn't have assets to provide a security. And alongside that, Triodos also has a really good following of retail investors that want to do good with their money, that they want their money to be creating positive impact. And the crowdfunding, the emergence of the crowdfunding is really to bring those two things together. So you've got organisations that need finance but can't access mainstream finance or project finance, and you've got individuals who really want to support those organisations. So the crowdfunding bit was kind of connecting those investors essentially, and allowing those organisations that needed finance to source finance from those individuals, and with us at Triodos kind of bringing that together and structuring the deals basically. So we've been doing that for 15 years now. We have an online crowdfunding platform, Triodos Crowdfunding, and that was set up in 2018. Before that, it was a fully offline process. And over those kind of 15 plus years, we've now raised over £212 million across 94 different transactions. So the majority of the finance that we raise through the crowdfunding platform is in the form of bonds. So essentially debt, a fixed term debt product. And the other kind of 10% has been shares. The reason for that kind of split is really just driven by investor demand. So investors generally prefer to invest in bonds because there is a fixed term over which they know they're lending their money, and when they're getting it back, and it's in that respect it's seen as slightly lower risk, whereas obviously with shares there's not that certainty, there's not that contractual obligation to repay your capital at a certain point. And the other thing about bonds is that bonds for an investor can be held in an ISA. So that means for the investor, they can receive their interest on their bonds gross without having to pay income tax, because they can be held in what's called an innovative finance ISA, which is a massive perk for the investor and really helps to encourage people to invest in those products. Unfortunately, those kind of benefits aren't available for shares. So in terms of our investors and who we raise the money from, we now have an investor base of about 9,500 people on the platform. A lot of those are kind of historic Triodos retail customers who've maybe supported the bank for a long time, very ethically minded, want to support ethical projects. And alongside those retail investors, we also have a number of relationships with ethical institutional investors, so the likes of Social Investment Scotland, Rathbones Ethical Bond Fund, Esme Fairbairn, Better Society Capital. Some of the names you guys might be familiar with some of them, but they invest through our platform in a lot of our products, which is really helpful because when we're doing like slightly larger raises, it can really help to kind of bolster the amount that we can raise. So it can be really beneficial to have those investors as well. We're a really experienced team of finance professionals. So the managers in the team, we're chartered accountants by background. So we're not just a distribution platform. We're really bringing a financial expertise, and we work really closely with our clients in the kind of what we call like investment readiness phase. So we put together financial models, we look at cash flows, we look at debt capacity, and we work with the organisation maybe for like 2 to 3 months before something goes on the platform to structure a product that we feel, based on the cash flows and the modelling, is kind of suitable for the client, and also is attractive enough to raise the money from investors. So we only put deals on the platform that we've worked on ourselves and structured ourselves. As I mentioned earlier, we work across all impact sectors on the platform. So we don't purely do renewable energy or community energy. Renewable energy tends to be about a third of what we've done historically in terms of the number. But we also work with a lot of charities, social enterprises, circular economy businesses across the board, as long as they're impact-focused organisations. Okay, so just a bit more detail on the offering through the platform. On bond offers, in terms of the quantum that we typically raise for our clients, the minimum tends to be about 300,000. The reason of that is just kind of economies of scale. It becomes really costly for the organisation to raise money through the platform, lower amounts than that really. And the maximum is about 5 million. Most of our offers kind of sit between 750,000 and 2 million. That's like a very, very comfortable kind of sweet spot on the bond side. On share offers, it's a bit more limited just because a lot of our investors are only interested in bonds, so we have kind of a smaller proportion that are interested in investing in equity. So we only really do up to about 1 million in share offers. And actually, in reality, most of our share offers tend to be around 500,000. It's quite difficult to raise more than that. The majority of the bonds that we promote on the platform are unsecured, although in the renewable and community energy space, that's a bit of an anomaly. They tend to be secured because there are the assets there, but we have flexibility as to whether we design the products ourselves. So typically, as I say, unsecured, but where there is like a very clear asset there to provide security, they are sometimes secured, because that can be more attractive for the investor. And lastly, as I mentioned earlier, the bonds are able to be held in an ISA. So as a bank, we're an ISA provider. So an investor can open an ISA with us, and then they can invest directly into a product through their ISA, and then they don't need to pay income tax on the interest they earn, which is really attractive for investors. Okay, so here's just a selection of some examples of some of our community energy deals that we've had on the platform in the last few years. So Empower Community Foundation, that was a refinancing of a solar farm in Angus in Scotland. So that was a 15-year bond, paying interest at 6.5% with inflation linking on the interest. We typically tend, when the bonds have a term of over 10 years, we typically recommend that the interest is inflation linked, just to make it attractive enough for investors. That's generally what we do, and if they're under 10-year term, that don't tend to inflation link the interest. So that was a really nice project. Thrive Renewables, many of you may know Thrive Renewables because they also support the community energy sector, but they're a long-standing customer of the bank, so we lend to them, and we've also done a number of crowdfunding raises for them. We've actually got a live offer on the platform for them at the moment. We're raising shares. We've got about 1.7 million. They're a slight anomaly in the shares because they have a very wide investor base themselves that reinvest, but we've done bonds for them as well. Bristol Energy Co-op we worked with last year. That was a share offer, and we raised 650,000 for them. That was for new projects, new solar projects in and around Bristol. And Ferry Farm, that was a bond offer. That was 4% interest. That was before the Bank of England increased base rates dramatically, and a 14.5-year term for refinancing of a solar farm. So yeah, so predominantly those ones are kind of the community ones are refinances, but we have raised finance for both refinancing of existing assets and also construction, and we're comfortable with both. We just look at each project on its own kind of merits, look at the modelling, see if we can make it work. Yes, so I'm just going to take some time to talk through a case study because I think it's the most helpful way to bring these things to life. So one of my favourite ever clients, Coigat Community Kick, who's the client of mine that I worked with back in 2018. So they had constructed their own community wind turbine, 500 kilowatt refurbished turbine, and they had originally financed that with very expensive construction finance, which I think can be quite a common theme, and that construction finance is really limiting how much they could put into community benefit, and the whole reason for them kind of constructing the turbine was really about providing an income stream for the community. So they really wanted to be able to refinance that with cheaper debt, basically. So so they came to talk to us about that, and we worked with them to structure a bond which could aim to raise 1.75 million, which was the amount to pay off the debt from the construction finance. So we worked with them for kind of a 3-month period in that investment readiness phase that I talked about earlier, looking at the model, the cash flows, and then designing a kind of bespoke bond product that worked. So it's just looking at the cash flows and saying, right, what can it afford in terms of capital repayments? Are we looking at a bullet? Are we looking at annual instalments? And all of these things are possible. So we came up with a 12-year bond that looked like what the cash flows could kind of afford to repay the capital over a 12-year period. Interest was at 5% with inflation linking. This was a feed-in tariff project, so it makes particular sense to inflation link the interest because obviously the income is being inflation linked with the feed-in tariff. So yeah, so that was a 1.75 million raise. We raised the money. We did quite a big. The other thing that's probably worth talking about is on each project that we work with, we've obviously got our investor base, which we're very reliable at raising the finance, but there's always an opportunity to bring in new investors on each project. It might be that they're linked to the project locally, or it might be just that the project just like sings to them. They like what the organisation's doing. So we kind of have a marketing campaign between each bond offer to try and open up the bring in more investors, basically. So we're lucky we've got a strong marketing team here at Triodos that support us with that. So on each project, we'll typically look to do a press release and try and see if we can secure some local press coverage to get interest from local community where the project's based. We'll also look to write newsletters that get distributed through the various Triodos social media channels, so we're reaching the kind of wider Triodos customer base. On COIGAC, they particularly wanted to really encourage the local community to invest. So we did quite well at securing some local press coverage, and we also hosted a community event. Where I presented alongside one of the directors to invite the community along to talk about what we were doing and see if we can encourage them to invest. We set the minimum raise, the minimum investment level that an individual can invest on this one was £250. Actually now, all our offers, the minimum raise is £50 for bonds, because we really want accessibility, and we really want, particularly on community energy projects, for the community to feel like they can invest. So we did the local event, and people came along and we talked to them and presented about the project. And what we did was we then once the project was ready to go up on the platform and open to invest, we had a 2-week kind of exclusive window where we enabled only the community to invest ahead of our wider investor base, to really encourage some local investment to come in. And we quite often do that on community energy projects if it's something that's important to the project. So we did that, which was really nice, and had quite a lot of local investment. So in total, around half of the 1.75 million, just over half, came from what we call retail investors. I think the average investment on sorry, I don't know why my video went off then. I think the average investment from retail investors was about £3,500, but we had investments right from the minimum of 250 and upwards from that. And then the remaining finance came from 3 institutional investors. So some of the ones that I mentioned earlier, so Rathbones Ethical Bond Fund, Social Investment Scotland, and I think SME, and they all invested in this bond as well, which was great because it's quite a big target to get to 1.75. So we had a nice mix of investors, and I think around 30% of the retail investors had a Scottish postcode, so we're all based in Scotland, which was also nice to see. That we do have Scottish investors obviously on our database, but we'd brought in quite a few new ones that had seen it in Scottish press and so on and so forth. So that was really nice. So COIGAC, they're now obviously 7 years into this, been paying down the debt, so the bonds. So it's an annual capital repayment which is administered through the platform and paying their interest. I actually invested in it myself, so I'm very happy when I get my annual interest payment and capital repayment. And it was a really nice project. Another case study, Empower Community Foundation. So this was also a feed-in tariff project, also a refinancing in a similar position where they had very expensive construction finance and wanted to refinance with cheaper debt. So we raised £2 million for them through a bond offer on the platform. This was at 6.5% interest rate with RPI linking. This was only in 2023, so obviously interest rates had gone up at that point. So when we're setting the interest rate, we're really kind of looking at obviously the Bank of England base rate and what the forecasts are going forward, and thinking about the term of the bond and what feels like a fair return to investors, as well as what's affordable to the group. So it was a 15-year term with 6.5% interest rate, and This one, the full 2 million was raised from nearly all retail investors, so quite different to Coigec. We think we only had one institutional investor, and we had 330 odd retail investors, which is really nice to see. It's one of the things that we really want to see, like a large group of individuals coming in to invest in these projects. Okay, I think that was me. I'm trying to think if there's anything else I wanted to mention. Well, yeah, one thing I might be worth mentioning, because obviously both those case studies I've just given were both feed-in tariff projects, and obviously we don't have feed-in tariff anymore. So just worth saying that I suppose what we're seeing with that is, well, we're working with some projects that are repowering where there might still be feed-in tariff, and obviously that's great. But obviously there are a number of projects now, the new projects obviously don't have that, and what that tends to mean when you're looking at raising finance is that the bonds kind of take a longer time to be repaid. So whereas we used to obviously be able to do like 10 or 12 years, you may look at the cash flows and it's like, well, it's going to take like 25 years to repay the debt. So we have done bonds of up to 18 years, but we know it's more challenging, because obviously asking someone to put their money away for 18 or more years is challenging. But we are looking at a couple of projects at the moment that are kind of longer term, and what's really encouraging is there are some kind of institutional type investors coming in, looking to support the sector to really help those projects. So there's an organisation, for example, called We Have the Power. I don't know if any of you have heard of them, but they provide, at the moment, they provide bridge financing to the community energy sector to get them off the ground. But what they're also looking to do is develop a fund which can invest in bonds and share offers such as ours, and happy to invest over a longer term. And what that can do is it can give us more certainty about raising larger targets, because we know, for example, if you've got a project, obviously no feed-in tariff, maybe it's going to take 18, 20 years to repay the capital. It might be quite hard to encourage like 2 million worth of retail investment into that. But if you've got some of these funds that can come in and potentially invest like a big chunk up front to reduce what needs to be raised from retail, and also just kind of put that money on the ticker on the platform to show, and it encourages other investment. So there are some funds like that starting to develop to help support the sector. So we're in the process now of trying to shape some of these projects that need a bit longer to repay the debt without the feed-in tariff income. And I think that was me. So I think we've maybe got some time for some questions.
Hey, Di. I have a question. I've been looking at potentially using renewable energy to power vertical farms. Is there kind of much of an appetite, instead of just say your traditional kind of like power and heat, of kind of looking at other applications that kind of might create more social and economic impact within the community, but also kind of create channels whereby, as you're saying, that the debt can be paid off quicker because there's more diversification in terms of what you're using community energy to do, and the kind of the socioeconomic opportunities that presents.
Yeah, thanks, Alan. I think like with all these things, like the devil's in the detail. So for us, it would be around it's all around certainty of income, really. We've tended to, most of our projects have been like to fund or refinance like, wind, solar, hydro, because they're the technologies that people are comfortable with, and it's a well-trodden path, and the income streams are very clear. So outside of that, we always just need to be mindful of the risk that we're asking a retail investor to undertake, because obviously the retail investors through the crowdfunding platform, they're not necessarily sophisticated investors. Some of them are, but not all of them. So it needs to be. So for example, we wouldn't tend to put things on the crowdfunding platform that are like new unproven technologies because of the risk associated, because that feels more like that's more appropriate for sophisticated professional investors to really understand the risks that they're undertaking. So I think it would depend on more detail on the project and what the income streams are and the certainty around those income streams, and therefore is it the right level of kind of risk but essentially the risk of the individual getting their money back for a retail investor. Does that answer your question?
Yeah, but I was also thinking as well, as you're saying, where like companies might just want it for ESG, where they invest in these projects. For example, if they've got a wind farm, in terms of getting some sort of feedback rather than just being, say, like a fund that kind of, funds an upgrade of a playground or something like that. Ways in which these things can be kind of more tangible and have kind of greater impact on communities. And I guess it's this type of idea, as you're saying, where there's maybe like a core element in terms of we give you X to pay it back. So in terms of that investor, all it might simply be is you've got, say, like a vertical farm operator, and they have a certain demand for power and heat that eventually makes them a customer. So you're just maybe increasing the size of your community energy network and kind of creating an additional income stream of the normal kind of investor ready a project, but the community themselves can do these basically side deals that kind of add extra value that can be seen, but don't add necessarily to the risk that you're dealing directly with. As your time said, we're investing in an energy system. That energy system traditionally provides energy. Yes, this is a traditional model, and this is kind of additionals that I said either people can back if they like the idea, or it had nothing to do with their investment. They've got a clean investment that kind of pays for people to receive power, heat, and transport, and they'll get their money back in 16, 18 years, whatever the bond is.
Yeah, I mean, potentially, and I'd be happy to kind of discuss it with you and get more details. I think like I said, we really just look at each project on its own like merit. So it would just be looking at it, where's the debt sitting, what assets are in that vehicle, what income streams are attributed to that. Therefore, how can we get comfortable that the money can be repaid? Can we get comfortable? What's the risk that it's not? And if we can get comfortable with that, then any other activities that the organisation might be doing are totally, it's totally fine, and it all adds to an interesting story. But it's just getting comfortable with the risk profile.
Absolutely. What might be worth doing in terms of observation, because I noticed Sarah has just commented about Click Manager. We're looking to do a vertical farm there with Farm Urban. I'm actually speaking to Rachel Norman at University of Stirling, who's involved in that. So Sarah, it might be good to see from your point of view that this could be maybe just a little pilot die that kind of demonstrates this. And the way I look at it, like I still work on European projects because I work for Irish consultancy. It's maybe having like almost like a tapas menu of things to say, actually, our community, we quite like this. We need to see what you're doing there in Sweden about that. That's interesting in Ireland, but that doesn't work here in England. So we're going to have to kind of adapt it because we do this instead of that. But I think the more that we can kind of create impact across like society, the local economy, the local environment, the more that kind of these things will accelerate and kind of get community energy more on the grid, if you excuse the pun.
Yeah, absolutely. Yeah, and I would be really happy to chat with you maybe another time in more detail on that, Alan, because I do think, I think from a raising investment and point of view, it's really, it's really interesting if an organisation is looking to do more than like the mainstream and like is doing other more interesting projects. So as long as it can be structured in a way that's a suitable risk level, then absolutely.
Yeah, that's great. And just one last thing before I kind of turn my video off is the idea with Rachel and it's in Forth Valley, not just Click Manager, like the bigger area around Stirling. It's an EIT food project that looks to do this growing of the food. but the idea is to kind of look at it in terms of its impact, in terms of public health, reducing non-communicable diseases, reducing admissions to hospital, length of stay in hospital, and like using expertise within the university around data and AI to kind of model the current systems in terms of the kind of the overall costs of food poverty and kind of malnutrition, and being able to kind of justify, for example, in this case, local produce costing more because you can demonstrate all these local benefits to the community.
Yeah.
And against the cost, say, of medicines and things like that, you're actually saving money because you're not having to kind of deal with the consequences of manageable events.
Yeah, no, it sounds great. Sounds like really interesting project. Definitely be keen to learn more. Thanks, Alan.
Thank you.
Thanks, Alan. Flick, I think you've got your hand up there.
Yeah, thanks. Hi, everyone. Hi, Di. That was brilliant. Really, yeah, a lot to think about. I'm wondering what conversations you're having about shared ownership and the kind of, yeah, the projects that you spoke about there were like fairly substantial, but presumably 100% community owned. And I guess the kind of, yeah, the sort of conversations that people are having at the moment are on 10% or 15% or 20% of a like larger private project, and that means like upwards of 4 million or 10 million, or, you know, kind of like astronomical numbers. And I'm just so interested to hear about where you've got to in those kind of conversations.
Yeah, thanks. Thanks, Flick. Yeah, really interesting point you raise, and very relevant topical point, because as you can imagine, Triodos are looking really closely at that. Yeah, we are really keen to support shared ownership projects, and there's a lot of work going on at Triodos to look at ways that we can structure that. The reality is most of that is more likely to sit with the main lending part of the bank because of the size. As you mentioned, some of these projects are really large. So our project finance team, which is kind of, some of you might know Norrie, based in Scotland, who's kind of done most of the community energy projects in Scotland. They can provide up to 20 million of debt, and they are, Norrie is involved in a number of conversations on shared ownership, and I'm pretty sure we'll be lending to some of those projects. I think I'm on the outskirts of those conversations, but my understanding is that they take a really long time. We've been really involved in trying to help with the conversation, and I know Norrie's having a number of conversations with those projects, and we would look to support them. On the crowdfunding side, we would love to support shared ownership projects, and there's absolutely no reason why we can't. Our limit is how much we can raise. So it might be that we would do something alongside project finance. So we have done this on many projects before, where it's needed some senior debt and some like mezzanine or junior debt, where the bond is like the junior debt, and the bank, Triodos Bank, provides the senior debt. So that's something that we've done on a number of projects previously, well versed, and it's something that might work on a shared ownership, because potentially the kind of project finance piece, senior debt gets you like the quantum, because it can do up to 20, and then the crowdfunding piece, which could be up to 5, it might just be 1 or 2, perhaps actually allows some community members to actually invest directly alongside, and that therefore potentially gets you to kind of like 25 million in total, with us working alongside our colleagues on the project finance side. So yeah, I really think that that's something that will happen, hopefully in the not too distant future.
Yeah, Di, you did mention that the investors have a focus on specific kinds of projects for security more than anything else. Are there specific sectors which are currently which have currently got their interest? Are we talking solar? Are we talking wind? Are we talking storage? Can you see a pattern? Is there anything happening at the moment that would be worth noting?
I would say our experience is that any kind of renewable energy is probably our kind of preferred sector, like across, like I said, we work across obviously a lot of sectors, impact sectors, but renewable energy in general are the offers that fill the most quickly. And we've done wind, hydro and solar, and there's been no marked difference in kind of, and we kind of judge how popular each project is by how quickly we raise the money, basically. And renewable energy, we always raise the money pretty quickly. So I don't think there's a preferred technology. We haven't done like EV battery. We'd love to do some kind of different stuff, and we just haven't come across the right projects that are kind of suitable for retail investment. But no, I think it's more about often with the community energy projects, it's more about, well, they're popular anyway because they're renewable, and we're always confident raising the money. But take the Call Get One, for example. It's like bringing out the projects that are going to be funded through the Community Benefit Fund, how that's going to impact people's lives. It's more, the technology is like a given, and that's doing great things, and then it's what's the impact on top of that, where you can start to really bring it to life. Yeah.
Okay. All right. Well, that's good. That's really useful to know. Thanks, Di. Rosie, we've got some questions in the chat now, haven't we?
We've got one, and I think someone's just added a second one. So the first one was Lenzie Community Development Trust are in the very early stages of a joint project with the local council to put solar panels on primary schools. So do you work with the organisation Solar for Schools, or is this the type of project where you just work directly with the trust and the council?
We do work with Solar for Schools on the lending side. They're a customer. They're not a crowdfunding customer of ours. They have done bond raises, but they've done them through FX. FX also have a crowdfunding platform, but they are a customer on the lending side. So we do know them, and there's no reason why we couldn't raise money for them on the crowdfunding platform. But we would typically raise money for the organisation that's going to be obviously where the income's going to sit, basically, like what's the vehicle where the income's going to sit. And it doesn't, beyond that, it doesn't, we can look at kind of different structures, and sometimes like perhaps a vehicle's been specifically set up and it maybe doesn't have the assets in it. But yeah, we're quite flexible in the approach on that. I think it's nicer if you can actually work with the community group. Solar for Schools, obviously a national organisation which work across a large number of areas. I think it is nicer if you can be kind of like through the bond or share offer, kind of supporting the local community and the local community group. But it just depends how it's structured.
Great. No, thank you very much for that. That clarifies.
No problem.
I'll just read out the other question in the chat then. So have you come across any community energy projects where investments also linked to other benefits such as discounted power as well as straightforward interest payment?
Yeah, that's a really good question. So we haven't on community energy projects, and we're not actually allowed anymore. So we used to years ago provide some like other perks. For example, quite a nice story, we worked with an organic beer brewer called Stroud Brewery in Stroud, and when we did a bond offer for them, we offered I think it was a case of their beer every year to all bondholders. And years ago, we worked with a renewable energy organisation called TLS Hydro, who had their own hydro projects, but also had a kind of retail arm. And we offered bondholders a discounted rate if they signed up to have them as their electricity provider. So we have done it, but a few years ago, the Financial Conduct Authority kind of changed the rules around that. I can't remember what the term they called it, but it was basically like you weren't really allowed to offer like additional perks of investment. So since then we've steered clear of it, unfortunately.
I was on a Zoom not very long ago when the wise man from the Western Isles, Callum MacDonald himself, was saying what a huge boon it was to his ambitions and his group's activities to have a representative of the bank sitting on the board overseeing the minutiae of every outgoing payment, but as well as legitimizing all expenditures. They also got a very helpful dose of financial advice in a more strategic sense, or at least that's what I understood him to say. Is that a special arrangement, or would Triodos offer that as fairly standard for an ambitious community that had ideas about borrowing £8 million to get started?
Thanks, Terry. I don't know which. I'm not sure if I know which project that is. Would it be a crowdfunding one, or through the probably more a bank loan? Do you know?
I suspect our West Coast community energy colleagues could put us right on that.
It's Point and Sandwick Community Development Trust, if I've got the exact name of the organisation correct, but I don't know what their finance arrangements are, I'm afraid.
Okay, yeah, that's certainly not one of ours. Yeah, we don't take a board position. We don't have any involvement post raise from our point of view. We work with the organisation whilst we're in the investment readiness phase, getting ready to raise investment, and whilst we're raising investment, and then our contractual relationship with the organisation is done. So we don't work in that way. I like to think that we provide some really valuable support over the period in terms of the modelling and coming up with a structure that hopefully works, meets the objectives of the group, and it ultimately raises the money for them, and then we move on. So we don't take a board position. I wasn't aware that we took a board position on with any of the projects that we finance through project finance. So I don't know, maybe I've misunderstood. So I'm not sure about that.
I mention it because the advantage that such an arrangement would offer a small community in a remote area that maybe struggles to muster a quorum for a meeting of import, and for somebody to have the vision of covering the car park in solar panels, for example, Community Energy Scotland would be the first port of call to get sound advice on that. And then they presumably would be the agency that referred us on to optional sources of finance to take it further. But I don't know about others, but certainly in our community of 3,000 people, we haven't got a list of people who are fluent in dealing with spreadsheets factoring in millions of pounds. And somehow, to fulfill the potential of natural energy as a resource in our remote area, we need to get those shared interests around the table to support the community, not to do it for us, but to support us. So there it is. I suppose I'm just waving it about, saying, yeah, that's good. We haven't got anybody readily on hand who's familiar with managing multi-million spreadsheets. And that's an expertise that we could do with tapping into.
No, I understand you more clearly now, Terry. Thank you. I understand your point, and I think in my experience, often the projects that get further in that are the ones that maybe have a finance director, because in the example of Coigach, for example, there was someone on the board who was an ex-accountant, and he was therefore quite financially savvy, and therefore he understood the finance world, and he kind of led on the initial discussions and got comfortable with what we could offer. And a lot of groups obviously don't have that. So I totally hear you, and it is a challenge. I mean, my understanding, and I know the funding landscape is slightly different in Scotland to England, but there are sometimes, I think sometimes this kind of funding maybe is available through CARES. you know, when organisations maybe get development funding, some of that can be used for what you call like investment readiness. And I know it's not the same as having somebody long term on the board, but some of that money can sometimes be used to pay, you know, an advisor such as us or any other financial advisor to kind of do that for you, I suppose, to talk to you about what it is that you're thinking, etc., and maybe to you know, create a financial model, keep on top of that model for you. And that's something that we've done with quite a few organisations where there have been some pots of money available to kind of fund our fees to do that, to help an organisation, albeit I just appreciate it's not the same as having somebody long term on the board, but it can help bridge the gap when maybe community group knows what it wants to do but has no idea where to start and also doesn't have the money to spend. For example, there's a fund in the moment in England called Reach Fund, and that provides up to £15,000 to pay the likes of us to do a model and to provide recommendations on a sensible financing structure. And I think you can get some funding at times through some of the cares.
Yeah, that's correct. I'm going to have to stop you there because we've come to the end of our Q&A session. Thank you so much for all your questions and the discussion, and thank you very much, Di, for being there to provide the answers. I think that's been really interesting, hopefully informative, and I hope some of you will be able to go away with some thoughts to continue with your plans.